Alright, so here we are. US30, the forward chart for Pepperstone, 18 December to 18 March. Of course, this will roll over very soon, actually, this week, and then they'll be creating a new forward chart for US30. However, for today's video, we're going to be talking about how institutions engineer liquidity, specifically on the standard chart, the candlestick chart, and how exactly we could sort of spot it in technical analysis format, and then sort of understand that once the market goes ahead and grabs this liquidity, then we can expect a rollover, and of course opportunity to then get involved. As for me, for Friday, we can see I did capture a trade on US30, and it was just a 1-to-1 over here. This was the entry realm, and then price hit 1-to-1. Majority of my trades, I do aim for 1-to-2, but unfortunately this was just a 1-to-1 trade, and then of course break even to go risk free. I would close about 50% of my position and then hold the rest for 1-to-2. But yeah, 1-to-1 is fine. But for NAS, I did capture a 1-to-2, basically same setup, but the outlook was sells. As we can see over here, we hit a 1-to-1, and then after that came to fetch, and then I got in a second opportunity a few minutes later. Of course, the market pushed up, grabbed this high over here on the 5. I got involved after the support break, or I would say, based on my system, an entry format for me right over here. Alright, but so let's talk about how institutions engineer liquidity. Okay, and liquidity can, of course, it's available on every single time frame. Of course, not all liquidity I would define as authentic liquidity. So you, as a trader, you have to decide and sit there and be like, you know what, these are the main points that I'm going to focus on, so let's just pay attention to these ones. Okay, so basic framework. Depending on our bias, right? So we either going to be buying or we're going to be selling. Okay, and of course, depending on the market type, we have plenty of market types. We have ranging markets, we have trending markets. Okay, and of course the ranging market we can define as consolidation, but I would say these are the three major market types. Okay, when I'm looking for buys, let me just find a new spacing. Of course, the market will be in an uptrend, or I would say it's suitable to be looking for buys when price is trending to the upside, and by that we can define with higher highs and higher lows. Okay, the authentic liquidity for this market over here is, of course, the higher lows. Okay, very, very important. And as we move up the time frames, the more significant these liquidity lows would hold. Okay, so first things first, I would just wait, be patient for price to push down, grab the liquidity before continuing the trend up. So if you're going to be taking buys, as price is making a pullback, okay, that's fine. However, unless market gives you an indication that it's going to be turning before liquidity, go ahead and take the trade. But again, before they actually move with the underlying trend, they're first going to be aiming for liquidity lows before pushing to the upside, especially if you want the big RR trades, right? Vice versa, we have a sell market, so a downtrend, and this we can define with the lower lows, lower highs and lower lows, and the pool of liquidity will be resting at the descending highs. Okay, very, very simple. So before we continue the underlying trend, wait for price to push up, grab the highs, and then look to get involved after that. So this is the separation, right? So it's just plain patience, because if you want to take the trade from this point, sure, you can go ahead. However, that's just you acting out of FOMO, because you might expect price to continue from here. But again, there's a lot of liquidity sitting above, so first wait for that money to be collected before looking to take your trade. Okay, so let me show you on practical assessment exact price action that happened last week on US30. So again, if I take the 4-hour chart, okay, let's just wait for this thing to load. Let me just see if I can clear all this. Okay, just find this. Of course, we can see the market is pushing to the downside, especially with this Iran war that's happening. Stocks, a lot of money is exiting the stock market, so a lot of supply being created and pushing price to the downside, as we can clearly see supply zones after supply zones, just prices interacting and pushing, right? So in a market like this, all the lower highs are significant no matter the time frame. Okay, I can show you here. There's a lower high, market grab, push to the downside. Okay, here's a lower high, market grabbed, push to the downside. Here's a lower high, market grabbed, push to the downside, lower high. Okay, so all of these are acts of repulsion. Let me use a highlighter. Push, 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 and push. Okay, and obviously you can just imagine, as we go lower time frames, we'll see more lower highs that are just being grabbed. Okay, so for this instance, for the Friday price action, plenty of lower highs captured here, or not captured, printed, right? So let me just actually delete this, show you from scratch. Okay, so this is basically where market opened for Friday's market session. Of course, Asia, London, and then of course this is when New York opened. Yes, right around here. So here you can see, are we gonna take sells? Are we gonna take sells in this region? That's obviously not the case, right? Bad idea, because of course you can clearly see they pushed up, and where they go, they pushed up, grabbed this high over here, grabbed this high over here. Of course, here we can see many other available highs. Price did not push up all the way. Just understand that one is enough. Of course, we are trending to the downside, so any lower high would be described as significant. Okay, the market doesn't have to grab all of them. One is enough for them to just collect and then continue the underlying trend. So where would you get involved in a system like this? Again, entry format is really personal preference. To be honest, there's thousands of entry methods, I would say, available on YouTube or wherever, Instagram, TikTok. I do know that there are traders that use a lot of SMC, ICT entry formats. You have fair value gaps here, we have a demand area over here, supply, and then of course you don't really have to catch the ultimate reversal. You can still take trades in between, exactly like I did over here. Even though my trade was a 1-to-1, unfortunately that's just how my system works. I cannot be too integrated in trades, but yeah, for instance, the NAS format worked way better than the US30. As you can see, I yield a 1-to-2, and yeah, obviously I could have gotten in early, but my entry format is very specific, so I'm not going to judge you if you enter here somewhere, as long as you understand what the outlook is and how liquidity is engineered in these industry markets. But that's the video for today.